What's good, YouTube? It's your boy Young Based. Today I wanted to show you guys how I analyze the charts and what like a typical trading day would look like for me. There's different ways to read the charts, but I just wanted to share my perspective. So here we are. Honestly, I trade odd USD, but right now I'm sitting in like a potential trade. In fact, leave a comment and let me know if y'all want to know how I analyze this trade, and I'll do that. I'll make a video on it. My trading style, I use more smart money concepts / ICT. That's why you can see like the highs and the lows, London low, London high, New York low, New York high, stuff like that. That's why you can see all of that on the charts. I also use straight technical analysis. I don't use any indicators for real except those, the highs and the lows. I have the kill zones on, so the purple pink area is the start of London session, and then the dark blue area is the start of New York session. It just lets me know when the sessions start, but other than that, I don't use any indicators. I do strictly technical analysis. First, I start off by analyzing the weekly time frame, right? For me, daily bias was something I struggled with a lot, but I watched a YouTuber. His name is T Trades. Shout out T Trades. He had like a simple way to figure it out, so I kind of like incorporated that into my strategy. He said, if you're looking at this week, right, and I'm wondering what the next week is gonna do, if this candle took the wick high of the previous candle and it closed above that candle, then it's more likely to be bullish the next week after that. So for example, let's see, this closed above, and let's see what this week ends in. That week ended bearish, right? Okay, so he also said if the candle takes the low but doesn't close below it, that it should go the opposite direction. So even though this candle predicted that this would be bullish and it was bearish, it's part of the game. You can't be 100% right in trading. But now this candle showed me that it grabbed the liquidity here. It couldn't close below, so this next weekly candle should probably be bullish and most likely take out this high. So let's see what happens. Yeah, so this candle showed me that this week was going to be bullish, and this week ended up being bullish. So and since this candle closes above this high, the next candle should be bullish as well. That's going based off of what he taught, right? So as you can see, this candle was bullish as well. Again, it closed above this wick high. So based off what he taught, this candle should end up bullish as well. Yep, and it's bullish as well. So even though my first example, this candle was supposed to be bullish, but it was bearish, that week I would have probably lost more than I won. But these 3 weeks, I would have had, since I was looking bullish anyway, I would have had more chances of winning trades in these 3 weeks, which would have covered the losses in this week. So that's pretty much how I determine my weekly direction, or weekly / daily direction. Because honestly, if I think the week is going to be bullish, I'm going to go into the lower time frames looking for more bullish entries than bearish entries, of course. I use the daily and the weekly for like more directional. I do most of my price action on the 1 hour, the 1 hour and the 2 hour. So let's go to the 2 hour first, because on the 1 hour, that's when my kill zones turn on. So based on what I see on price action, I mean, price is clearly bullish, right? So you can see like it's making higher highs and higher lows, right? So like, yeah, high, low, high, low, high, low. This would technically be the low, or one of these. I would count this as the last low, because this is the low that made price break this high. So that's how I was taught price action. To solidify a low, you need at least a 2 consecutive candle pullback. That's how I was taught. So this right here, for example, would be considered a low, because there was 2 candles back to back that went down. But like this right here, let me find an example of something I wouldn't consider a low or a high. Let me keep looking. So, okay, I wouldn't consider this the low, right? I wouldn't consider this the low, because I would have seen this as just one giant move up, right? That would not have been my low. My low would have been here, because I see 2 consecutive bearish candles right here. one here, one here, one here. This for me would have been low to high right here, right? To low, then to high up here. Let me keep that up there. Then to high up here, high, and then so on and so forth, right? So then this would have made a low. This is technically a high too. So this would have been a break of structure when this low was violated, because this low made a new high. I count wicks as highs. So if it wicks above this old high, I count that as a new high. And then when price came high, low, higher high, lower high, I would have then been looking for an entry in this area, right? Because it left some gaps in the market or imbalances, and also this was a displacement. So after price took these highs, it like came down aggressively. So I call that a displacement. And then there's a nice gap here that I would have probably took an entry from, right? And then I would have shorted it, maybe right here, stops above this old high, right there. And this was probably like a 1 or 2.5 trade, maybe 1 or 2, 1 or 2.3. Yeah, that's a 1 to 2.3 trade, which that's not a bad trade. But I'm more of a day trader, so I don't look for entries on the higher time frames. I just use the higher time frames for like market structures. So the last low for me in this trend would have been here to up here to down here to this is a new high. And for this low, for me to consider this low violated, so this is the last low for me. For me to consider this low violated, I need a candle closure underneath it, me personally. Some people do it through the wicks. Like technically, if you were counting the wicks as a break of structure, this would have been broken. This would have been a break of structure. But I need a candle closure below it, just because price likes to wick and just grab liquidity and then go in the true direction. So when I see a wick, I just see it as a liquidity grab. So I feel like this was a liquidity grab right here, and it wasn't a true break of structure. So I'm gonna continue on the 2 hour to see if price goes up or down. Okay, so price broke below. So now structure is bearish for the time being. Structure is bearish. Yeah, see, made a lower high, continued down to a lower low. Then I'm expecting a lower high and then a lower low. So yeah, continue down, lower low. Did that break low? That did not break the low. So it's not a lower low yet. That's a lower low. So this would be the new high up here. And then I would consider this a break of structure. So price would now be bullish, right? This was the old high. This is the low. And then you see this displacement after it made a new low to a new high. So now for me, price has switched structure and price is bullish, right? So what I would be looking for is price left a gap right here in the market. Then I would look for price to come back into this market or into this gap. Look for price to come back into this gap, potentially target these highs. So there's liquidity up here. Yep. And I want to see price come down into here and come up here. This is just how I see the market. So price never came down into the gap, but it still ended up taking out the liquidity. And that's just part of trading. Sometimes your plan works, sometimes it doesn't. If it would have came in here, I would have took the trade to go up. But since it didn't come back, there's no trade. And then that's just how trading goes, you feel me? But yeah, so this is a little bit of how I see the market. Obviously, I'm a day trader, so I work more in the lower time frames. So I take my entries in the 3 and the 5 minute. I would figure out which direction the market is moving. If I see a break of structure with displacement, find the gap in the market, wait for price to come back into the gap, right? In fact, I'm gonna show you. Since I kind of just messed up the chart, I'm gonna find another one. Here's a good one. Here is a good one. give me this rectangle. So there's big gaps in this market right here, right? Obviously, price was bullish right here. So price was first bearish, high, low. Price was bearish, came to low. Then price came here, came here. I would have considered this to break a structure to go bullish. Came down, went high up, came down here, went higher up here, broke structure again, bearish. And then price came into the gap it left in the market, right? So once I see, when this is my higher time frame area of interest, right? Once price comes into this area, then I go into the lower time frames. Let's say the 5 minute. Let me see if I can find that area. Right here. Okay. So once I see price is in my area. So a good thing about the market is it's fractal. Price is fractal. So whatever it does in the higher time frames is gonna do in the lower time frames. So literally I'm doing the same thing just on the 5 minute now. So now let me delete this the arrows. So now I find my market structure. So this is the last high I see. This is a low. This is the last high. Then price came here, and broke structure. So I see a break of structure, right? So now I look for the last gap. This is the gap I see. And it happened to happen during New York session, which is when I do trade. So if I would have saw this trade, I would have probably taken this entry, even though it looks like a trade that you would have had to hold for a long time, right? But ultimately it ended up working out because after I saw price change structure, and I took my entry at the gap, put my stops just at the high of the last high before the break of structure, right? This trade you would probably have to hold for like 2-3 days, but at the end of the day it was a winning trade. And then target liquidity, which the nearest liquidity would have been down here for me, low key. So liquidity, okay, and then draw that right there, boom. And this is a 1 to 3 trade. Yeah, this trade took a day or 2 days, maybe 3 days to play out, but at the end of the day, that's just how trading is. Even right now, the trade I'm in, it was something very similar to that, and it just happens that I'm holding it through. I took it in New York session, right, and now I'm holding it through Asian. Hopefully during London session and New York session tomorrow, it'll probably come all the way down here. But as long as, like, now I could technically put this trade into break even. I'm probably gonna do that later, maybe before I go to sleep, so I just don't lose anything. But yeah, so that's how I trade. I trade with pure price action. And honestly, even with this entry, if you were a swing trader, you could have held it all the way down to here. I'm not a swing trader. I don't have this much patience. I'm just being honest. That's a lot of patience. But that would have been a 1 to 14 trade, right? And you got in at the top here. You would have had a little bit of drawdown, but after that, price never came back to your entry, and that's because you're following market structure and price action. So that's how I see the markets. That's how I trade. I just wanted to share that with y'all. Thanks for watching. Make sure to subscribe, like the video, share it with your friends, and if this helped you, leave a comment. And if you want to know the outcome of this trade that I'm in, leave a comment and I'll make sure to make a video on it.